Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. G'day listeners and viewers across the country and welcome to another episode of Street Smart Property Investing. Joined again by Mr. Trent Durrington. How are you, Durro?
Phil, good mate, good. It's plenty of arm wrestling going on.
Mate, it's crazy, right? This is a special Hunger Games edition, guys. I hope you enjoy this real practical discussion about what's happening on the ground because it is chaos out there, right? Let's talk first, mate, about stock supply. Of course, stock levels are just incredibly low. As a property investor at the moment, and using the Hunger Game example, it's like there's a shortage of food in the world, and property is in such short supply. It is so highly desired at the moment by, families that are looking to buy family homes, investors looking to crack this perfect storm of opportunity, but there is just way more buyers than there are sellers.
Yeah, it is, mate. It's and continues. I thought we would have started to see some markets plateau, but it's certainly not the case. And it's almost, I feel like, it's almost ratcheted up to another level.
Mate, it does. We were starting to have a little bit of optimism that the first home buyers may have been falling away, creating a bit of space for investors to come through. We thought there'd be more land, more opportunities, but that just isn't the case, mate. We're still seeing plenty of activity from the first home buyers.
Yeah, we are. It's, record numbers through a whole range of different markets and, the stats just around the population and the growth and the push into certain regions is continuing to grow.
Well, mate, jobs are being created in those regional markets. The property's still so affordable in those regional markets. Families are quite happy to help out their kids to get a foothold on that property ladder.
Yep.
All of those ingredients are now seeing more people than ever moving into those regional markets, giving their families a fresh start. It's only adding to the stock shortage in those markets, but like I said, a lot of those markets were markets we were hoping investors would have access to, but it's just too competitive.
Yeah, that's right. The swell has happened from all out of the capital cities and continues to push. Vacancy rates are still coming down. I definitely thought come here September, getting ready for the last quarter, as I say, we'd be starting to see some normal sort of terms, but it's just seems to be getting harder.
Mate, you were really optimistic that we'd see a bit of a turn in the market where there would be a new window that would open up and there'd be more supply for investors, particularly land supply, but it just hasn't happened, mate. We're now starting to see, one of our favourite markets, Southeast Queensland. We've done research on 18 estates that are rolling out, the opportunity for people to buy land over the balance of the rest of the year. They're rolling out a number of new stages within those estates. But not one of those estates is prepared to take on investors. They will only offer the land to owner-occupiers, which I've never seen before.
Yeah. Look, typically these developers, if you use, say, those 18 estates, they would give an allocation because it's still healthy in certain estates to have a percentage of investors in an estate. And they've quickly turned a blind eye on some of their relationships where builders regularly would secure stock through a put and call. That's still not happening because the stock's not there. But we're also seeing developers crash deals so they can put up the land price.
Yeah.
It's Hunger Games at its best.
Mate, it's crazy, right? Now, typically if an investor or a listener isn't used to how we would normally be able to function, every year for the last 30 years, I've known that I've had known and trusted builders that I could go to and have a look at their stock list. They could open up their stock list and say, Phil, this is some land we've got access to. We can get a few blocks in this stage, a few blocks in that stage. These are the plans that will fit on it. There's so much time and preparation and certainty around what stock will come up over the, up to 12 months in advance. And typically we can go to some of the bigger builders, the people that we've got long relationships with, and they can have 100 or 200 items of stock that they can forecast in advance. But there is no stock list at the moment. No one's got a stock list.
No, it's not.
No one can access the land, right?
And you know, you would have some quality townhouse builders that would always have that are securing projects all the time. But because of construction prices and where they're going, that all that stock's being held back until there's a levelling of pricing of materials. There's another 25% increase in timber frames and trusses last week. So that's you know, another factor. It's hard, mate. Very hard. I sometimes, you know, you see me shaking your head and get frustrated, but it's a unique time.
Yeah, well, mate, look, we've got to admit we've been guilty probably 3 times a week of wanting to tap out and say this is too bloody hard, too hard. Like, it's painful, right? We've never worked this hard ever, and then have deals stole from underneath us at any rate. You know, we've got deals and contracts and all of these layers that we've been working so hard, often for months, to get those particular properties for certain investors, and then, you know, maybe a third of them get stole out from underneath you. It's like the legs get kicked out from underneath you when you think you've got a result, and then it gets stolen away from you.
Yeah, you know, it's
frustrating.
Very frustrating. Very frustrating. And markets are still moving. You know, I've a few conversations I even had this morning with agents that on a retail perspective can't use core logic for comparable sales, only because markets are moving within weeks. You know, core logic is typically the basis of, you go back and look at historic sales. Typically, a core logic sale doesn't get listed for 3 months. In this market, it's just too quick, too long rather. And, and you know, there might be dozens of sales that have, you know, exponentially increased in price. So, yeah, it's interesting.
Mate, it's interesting from every angle. We mentioned about some townhouses. We got a little bit excited about some townhouse stock that we knew was coming up. I don't rarely get excited by townhouse stock. It's not exactly our go-to core product. We're all about house and land. We like, you know, sizable land components under everything that we do. But there was some really sexy townhouse stock that was coming up. We know the developers have pulled that stock back off the market. They're not brave enough to be able to build it because they think that in that 12 or 18 months to get to the end of the project, the building costs could have moved so far. The profit margins they're working with aren't big enough to be able to allow for the possible change in that time. So that saw a lot of product get removed from the market.
I'm hearing that all. That's across the board.
Absolutely. And the ones that are brave enough are putting a premium on their stock. They're adding another $100,000 or whatever they want to the stock. And the irony of it is people are paying it. And what we're seeing is the downsizers, this huge chunk of Australia's population, predominantly the baby boomers. We know that there's about 1.6 million baby boomers preparing to downsize homes in Sydney and Melbourne largely. And they're quite comfortable to pay a 10% cash deposit on off-the-plan stock at the moment, up to 3 years in advance, and enter unconditional contracts because they're just confident that they'll sell their house, they can take their time, they can, pack everything up and do this comfortable transition with some certainty into these beautiful lifestyle locations. But buying stock 3 years in advance, and that just gives a bit of an insight. You know, there's no stock today. The stock that's in the pipeline up to 3 years into the future is now being sold and being secured. It's crazy.
Yeah, it is. It's, I guess it's whether those people have been sort of sitting on their hand, and it comes back to COVID, and it's been a readjustment in their lifestyle and how they want to live. And they've also, I guess, if they're buying that far out, it's given them an opportunity to sell, not be pressured into, buying something that potentially it's not quite right.
They can't compete, right? They can't compete. That bell curve is just, it's a game changer. If you look at Australia's population, the sheer bell curve, the mass, it's like a garden hose with a tennis ball travelling along a garden hose, and all the way through that life, whatever stage of life the baby boomers have been at, it's affected industries, right? Now, at the moment, that bubble of population, this huge mass, over 5 million of them, are heading into retirement. A lot of them may have retired a little bit earlier, but the GFC hurt their super funds. There's a whole heap of data that I love with regards to the baby boomers. But now they're transitioning. They want to transition. They can sell their houses for $2 and $3 million in the Sydney and Melbourne markets. They can move to beautiful regional locations and have lifestyles that they have dreamt of, buy a house for under $1 million, live a great life and have plenty of money left over, but they just can't get access to the stock.
No,
so they're happy just to pay a 10% deposit and say, okay, we've got that property held, Harvey Bay or Port Macquarie or whatever those, top retirement locations are. And mate, investors are just locked out from another whole perspective.
They are. It's just, in our discussions and strategies with our investors, it's preparing them to buy the best opportunities, but to make sure they're finance ready. And in some instances, we're not quite there yet, but it's been the case in Sydney and Melbourne. But it's just around the corner in southeast Queensland. The norm's going to be signing unconditional contracts.
Yeah, mate. I'm seeing this. The conditions that have been imposed on investors are, I remember when I was able to control, or we as a group were able to control hundreds of property transactions based on $1 deposits. This is you look back and go, we used to control a property for months while we worked out exactly what we're going to do using a $1 deposit. Weird stuff, right, compared to what today looks like. It's just a totally different world at the moment when it comes to what's required to secure a property and how much those conditions are getting harder by the week.
That's it. Look, at the end of the day, there's probably a feeling of frustration from us talking about it at the moment, but at the end of the day, the areas that we've spoken about for the last decade have had a great run. They're continuing to have a great run. Vacancy rates are coming down. Prices are going up. Only the fittest are securing stock. So it's all good for our investors and our clients, for us, and the future's strong.
Mate, it's no doubt it's worth the effort. Not for the faint-hearted.
No.
You can't go in half prepared. You can't go in thinking you're going to just, I don't know, have a look, kick a few tyres, think about it.
No, you get tapped and you're left behind. You either get on the train or you don't.
Oh, mate, there's plenty of really astute investors, plenty of people with plenty of experience that are still getting, left on the sidelines because the market's moving too quick and the competition's too hot. This is such a broad-based boom. The other thing is that everything resource-wise, whether it's building materials or staffing or whatever, everything's getting spread so thin that it's affecting the whole industry, mate, in a whole range of different ways.
Yeah, well, you're talking about the downsizers, a whole range, even the first home buyers. First home buyers are having a really good run in regional. I'd be interested to know, understanding, okay, have they moved to that region because of jobs? They can get jobs, now they're ready to buy. That's another little tangent we could go down. So that, as you say, it's a broad-based boom.
And when it's so broad and there's so many houses trying to be constructed, so many people trying to do a reno so they can prepare their property to cash in on this boom and, put some equity away to the side, create some retirement wealth, as well as have the budget to go to these regional locations. All of that pressure, the renovations, the new builds, etc., across so many postcodes are seeing building materials skyrocket and continue to change. We thought it would have plateaued out by now, but it's still, leaving even the most, some of the best kind of builders and teams and most informed people believing they probably hit the peak, but it's still going up week on week.
Yeah, it is. It's
like you said, trusses went up again last week.
Yeah, 25%. Well, a couple of my builders expressed that they're going to cop another 25% increase in timber frames and trusses before Christmas.
Yeah, man, and this is weird, right? So from the point of view of entering a contract, I know people that are doing renos. We've got some friends that have just finished a renovation, and it should have made sense, but they come out the end of that renovation losing money. So it's taking on a building project of your own or a big renovation or something that's a bit, got that risk attached. This is not the time. You need that certainty around absolute fixed costs, mate.
Oh, bloody oath. You go into a contract and it's not fixed price, you're going to be in a world of hurt.
Yeah.
And that's coming.
Yeah.
So just we haven't seen those yet. We haven't heard the stories, but I certainly understand it's coming. But there's also talk that the builders, many builders, depending on how their contracts are structured, it's a profitless boom for builders. Because
that's an interesting thing, right?
Yeah.
Profitless boom,
yeah,
and I've heard that, and we don't often repeat that, but it is really interesting.
Obviously,
they would think they're sitting around rolling in money.
Yeah, well, the builder's fixing a fixed price contract 6 months ago, and he's building it today. Potentially the increase in supplies and labour to build the house has just eaten away his whole margin. So he's effectively building the house for nothing.
Yeah.
So it's not good for our builders.
It's not good.
No.
A lot of people don't realise that they have to maintain a minimum amount of profit margin, or it reflects badly on their insurance moving forward as well.
That's a very good point, mate. Yeah, the type of builders that we deal with call them Tier 1 builders. They have the governing bodies look at their books quarterly, and exactly that. They need to look at, okay, what is their balance sheet look like? What is the margin they're making on each build? And it has to be at a certain percentage, otherwise they get a tap on the shoulder.
Yeah, and that's all for great reasons. That's protecting the home
consumer
owner, the consumer, making sure that they're safe and they're with a building company with good, sound business practices. So there's obviously a spill-on effect if that those profit margins get eroded away at. The other thing that's happening is not only the resources with regards to building materials are becoming in short supply. Of course, trades are getting stretched thin. There's plenty of tradies out there that are able to pick and choose and put their rates up and so forth, which is obviously a real thing. And what we're noticing is the building companies that are trying to gear up, the industry that's trying to gear up, whether it's valuers or the building companies or whatever that are trying to scale their teams. Unfortunately, there's not enough qualified people out there, really experienced people to fill those roles. So they've got to take on people that have less experience, less knowledge, and that creates more chaos.
Yeah, it does.
Problems, mistakes, things get missed.
Yeah.
Yeah,
no, it's a frustrating time as far as that's concerned, but everybody's spread thin.
Mate, it's so many buyers, houses are selling prior to open homes. People can't find a property to rent. Investors are, no matter how finance ready they are, they're getting caught on the sideline, and land developers aren't even allowing them to buy land in estates. It's certainly, and the Hunger Games really is a appropriate topic. I'm not necessarily a huge fan of the movie. I'm not a fan, but it's it does describe the market at the moment, mate. It's weird.
Yeah, only the strong survive.
Yeah, mate. We're even seeing valuations on properties. We can see a property get valued. I remember one that got valued at 680,000, and I was like, wow, I'd buy 10 of them. At 10 of them at 680,000, we asked for a second valuation, and the valuation came in from 680. The next valuation came in at 830.
That's just another
weird.
I guess the valuers are connected to the building industry. That's another industry that's running thin. That just tells you when you see a fluctuation with a value like that, the value just hasn't put the time in to research. Okay, what is the true value? But that's another good indicator.
We're just seeing layer after layer after layer. If you try to navigate the whole landscape, you've got to have a team around you. You've got to have a formula. You've got to tick every box and move through it in a methodical way. You've got to have your broker, your legal team. You've got to have everything all working in a real unified way, or you'll get caught somewhere in the process where something's going to take 2 or 3 weeks longer than you expected, and you've lost the opportunity.
Yeah, that's right.
Mate,
it
is
maybe not 2 or 3 weeks. It's
2 or 3 days.
Yeah, 2 or 3 days.
We're literally seeing opportunities get presented to us, and we need to be able to supply the buyer's entity details, all of their details as far as personal details, copies of their driver's license, paid expression of interest to the land developer, a letter from their broker, giving a letter of confidence that's showing that they've got the ability to get the loan. All of this detail within an hour of identifying an offer. That's how crazy it is at the moment.
Yeah, it is.
Mate. giddy up.
We'll
Well,
see. We'll
I'll tell you what, it's certainly going to have to, we're going to have to suck it up for round 2 because I think the rest of the year is going to go up another level again.
It is, mate. It is. It's anyway, jump in the trenches and we keep finding a way.
Yeah, mate. I think
keep finding those the A-grade opportunities.
Mate, it's there. And for the people that do get through, I'm sure the rewards will come with it. But I hope that gives you a little bit of an idea, the listeners. I hope it gives you an idea how crazy it is on the ground, how much it is a Hunger Games, issue out there at the moment. I'd prepare very well before you jump into the game because there's just no way of breaking through those barriers unless you go in prepared with a great team around you. Hopefully you got something out of that. Thanks for joining me, mate.
Good on you, mate. Cheers.
Talk soon.
Thanks, listeners.
Thanks for watching, guys. Don't forget to subscribe and also feel free to leave me a question. I look forward to helping as many property investors as possible. Take care and we'll talk soon.